Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining us for this segment, we have Soon-Young Kim. She's the manager of Tiger NASDAQ 100 Covered Called ETF with Mirae Asset Management. Soon-Young, it's great to have you with us. Welcome to Trade Talks.
Hi, Jill. Thanks for having me here.
Congratulations on the launch of Asia's first NASDAQ 100 Covered Call ETF. Explain to us what a covered call strategy is.
Okay, so basically, a covered call strategy is a combination of a long position on an asset and also a short position on the call option on the same underlying asset. So if the asset price goes up, the return will be offset by the loss from the call option, and the investors will receive a premium on the option. So as a result, the investor would be giving up the upside potential in return for a certain gain on the option. Our new covered call Tiger ETF will have a long position on the NASDAQ 100 index stocks, and at the same time, we're going to sell NASDAQ 100 index call options. We're going to sell ATM options every month, this is going to yield to a higher option premium than OTM options. We then plan to distribute a certain amount of the option premiums each month back to the investor, and this distribution amount will be in proportion to the premium.
What are the key investment benefits of the NASDAQ 100 Covered Call ETF, and perhaps tell us about some of the risk factors?
So I think that our main investment point here would be that this strategy is going to produce sustainable income from selling options every month. Premiums from the options sold will be distributed back to the investors, and this would position our ETF as a high-yield income product. We believe that selling options on the NASDAQ index should give out higher premiums than other index options. And one of the main variables to option pricing is market volatility, which means that higher market volatility will lead to higher option premium gains. And NASDAQ 100 ATM options actually has a historical number of 1 to 3% on monthly premiums, and recent numbers are higher due to current market situations. And secondly, beyond the steady income these options give out, it also lowers the volatility of the portfolio. So the option premium would act as a buffer when stock markets fall. And the NASDAQ 100 index actually has shown a volatility of 26% the last 12 months, whereas the covered call strategy has an annual volatility ranging at 19%. As for the risks, however, an important point to be noted here is that this strategy has a return profile that is quite asymmetric, which means that there is a cap on the upside of the growth on the ETF price, whereas a fall in the stock market will impact the fund. So when deciding to invest, it's crucial to fully understand the strategy and the mechanism under the monthly returns. So the fund will not follow the growth trend of the NASDAQ 100 index, but rather it's going to produce steady income from the option strategy.
And finally, Soon-Young, how do you foresee future demand on the new Tiger Covered Call ETF launched in Korea?
We actually have very high hopes for the fund to grow at a fast pace for two reasons. First of all, we believe that there is growing demand for income-providing products during high volatility. Since market volatility hiked early this year, investor sentiment seemed to have moved toward less volatile and safer products in the Korean ETF market as well. Newly launched thematic ETFs this year gained less interest, whereas income funds such as Korean REITs and Balance and dividend funds saw inflow. Actually, it's only been a few months since Korean ETFs were allowed to give out monthly dividends here, and we also reinforced some of our existing Tiger Income ETF lineup to monthly payouts. And Korean investors are showing greater interest in this new monthly dividend ETF concept. So we expect our Tiger NASDAQ 100 covered call ETF to have the highest annual yield yet among the listed ETFs in the Korean market. Secondly, we think that the strong presence and track record of the QILD listed in the US reassures that the income from NASDAQ 100 index options can act as a solution for income-seeking investors. QILD's dividend yield, trailing dividend yield as of August exceeded 15% due to increased volatility of the market. And as we're launching the Tiger ETF version, we believe that it'll allow local investors to have easier access to this strategy, and they'll also be able to purchase this ETF for their personal pension and retirement pension accounts. Overall, we believe that it is the perfect timing for this fund to be introduced to Korean investors, as volatility of the NASDAQ market still remains quite high at the moment, which means that call option premiums are at high levels. And at the same time, the market levels are at a much lower position compared to last year figures. Considering the asymmetric return profile of the strategy, entering the ETF when there is less downside risk would be an important point for long-term return.
Okay. We appreciate the insight. Soon Young, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.
Thank you.